Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Somewhere. It is another day, and the Fed in the United States, the Federal Reserve banking system, are starting their meetings. So I guess there'll be teeny weeny little rumors here or there, little stories here or there, that type of thing, and which will probably put pressure on the markets. Metho, good morning, good afternoon, and good evening. Robin, good morning, good afternoon, and good evening. So we're going to see, and then tomorrow they'll make the announcement. They'll have their press conference, and then that will be it. We're seeing the 2-year bond now trading close to 4%. It's like 3.99 or 3.989, something like that. It's just like literally one full tick off from being 4. Let's see, we got some news coming out as we speak. I think is it retail sales? No, building permits. Building permits, 1.517 million. They were expecting 161. That's usually, that means a little bit more slowing economy. And at the same time, before the Federal Reserve got in trouble for all their shenanigans, Renato, how you doing? People would have anticipated that to be, something good. Metho, 45.8%. What's 45.8%? Building permits? And I'm seeing the 10-year bond trading at 3.55, almost 5.6, and the 2-year must be trading at 4% at this point because it jumped a little bit too. So, we're seeing that action overall with the stats, but borrowing costs are going up. August housing starts. We're at 1.57 actual, and they were looking for only 1.44. So that's a good thing. It means they're still doing something. I guess it's the permits that they're worried about. August permits were down. So that means, we'll see. That's what it means. Building permits lowest in 2 years. Okay. So that's what they are. PPI Germany. Ah! Okay. Yeah, I'll tell you, it just keeps on rolling, doesn't it? All these stats. It's knocked the Dow Jones down about 50, 60 points. The S&P's down about 4 or 5 points. And the Tech 100 about 15, 20 points, just in news, which is not much. You really need to fall into a good 3.5% move to get markets to trend like that, That's what it really seems to be at this point, in my mind. That seems to be the breaking point, So, what do we got here this morning? You can see the dollar index kind of perking its head up a little bit. We're going up in value here. Over on J4X, you can see we are on the second day of a red. Chicago Hunt, as I said right there, is perking up a little bit. It's starting to curve here. We're seeing 3 dots of red. You see the weeklies trying to turn down. And you can see over in J4X, you're seeing somewhat of the same action, red for a couple days, and you can see the green line trying to turn down, whereas right now it probably will shift J4X over the next couple hours since this is a daily chart. Let's take a look at the weekly. You see the weekly's trying to do the same thing, trying to break down. It's through here, but we see no red here at the moment. And so still in the buy, but telling us that it wants to try to roll over. Boy, how many times have we thought the dollar is going to roll over, and it just does not do it. And it makes total sense. When you see like PPI out of Germany or the United States, you see, things are not really growing. We're in recession. That's why the 2-year is trading higher than the 10-year. It's anticipating that in the short term, rates will be higher. In the long term, rates will be lower. That's why they do that. They do that anticipation thing. And so that's where we're at the moment. Now let's jump over to... and I don't think I have anything else to say about the economy solely because, we got the Federal Reserve talking over the next 24 to 48 hours, so there's not much to be said about it all. All right, let's drift over to the euro and see what the euro's up to this morning. Lost that one, did we? Where's that voice going? Let's see. Right there. Nope, that's not it. We go to there. There it is. And there is the euro right there. And you see we're seeing some pressure out of it this morning. You know, just you know, as long as we stay in this weekly sell, and we've said this over and over again, as long as we're staying in this weekly sell, you can't trust any little bumps on the upside. You know, we went into a daily buy here. You got the volatility signal there, and you know, and it just is starting to roll over again. Takes it all back. That longer term pressure, you know, it's one or the other. You get this, the histogram right here, and you get the green line moving up with a buy, and then you got to figure that you're going to get a little twist, you know, that ABC thing go on, and then it corrects a little bit and then takes off, and that's what we're watching for. Let's put that up on J4X, the euro, right there. And there's the dollar euro. You can see we've had a lot of red with that. You know, 4 days in a row of red, a green, and then red again. And so the same right here. We've got 1, 2, 3 days of red with a green on the third day, and then, you know, a little buying, and then you see like yesterday, J4X joined in, tried to curve, and now it's trying to go into the south again. And oh, what do we got here? Oh, interesting. Sun just sent something. Just answering my son about a computer. All right, from there we take a look at the euro, as I was saying, and I guess that's about it. There's not much more to be said about the euro. Anybody care to see or, you know, explore something, just let me know. But at this point, we really want to see this get through the zero line before we believe there's a decent bounce coming. On the weekly chart here, down at the bottom. From there, we'll go to cable. Cable's been proving that point continuously. You see the pressure is there. You know, it's going on 6 full weeks in a sell, you know, coming down from the 120-ish area to, we got as low as something like, what was that? That was 114. And we got ourselves a little bounce out of it on a daily, then went into a sell, and then right back into the buy again the next day, and then we went back into the sell here. Let's get that on there like that. There it is. And it's been in the sell ever since. It's just been gliding down slow and steadily. The cable and there we have, what else can we say about it? Let's take a look at it over on J4X. I'm still answering my son. He keeps on pressuring me to go after a particular laptop. You can see here all the red. And you can see it's trying to bounce. Just like we're trying to bounce right there. You can see that action there. But at the same time, we're still in that sell just like here. And, you know, unless this turns green on J4X, on the Hinky Askies, or this is trying to get through the zero line on a daily, but the weekly just seems to be so far away, it doesn't seem to care, you know. It just seems to be, you know, just running away from it all. And I guess that's the way it always goes, you know. The the cable, the euro, they all seem to work together on some level. But it does, since the euro has gone below 1.00, basically what I call par, 100. It's kind of tried to lift a few times. Money's tried to come in. Oh, Metro says 10-year U.S. bonds, please. Let's see what the 10-year bonds look like. I saw them this morning. They were getting pressured. They were at their lows at like 5:30 this morning. So I'm sure they're looking just as... Let's see, where's it at? It's around here somewhere. There they are. There's the December 10-year. You can see that pressure on it right there. We've been in that weekly sell since the 118, 119, I guess like 118 area. And you can see we're trading at 113. We've been in that weekly sell now for, what is that, 2, 4, this is the 6th week. And it doesn't, and that's not, finding any way to move back. Now let's see if we can find that on Dukascopy. We have I know where the 30-year is. Let's see if we can find, maybe we can figure out if there's a 10-year up there too. There's the 30-year right there. Now that's the Dow Jones. Where is it at? There's a 30-year. We looked at it yesterday. There it is right there. That's the 30-year. And let's see if we can come up with... there's the... And there's the Bund. You can see the Bund, European Bund. Euro Bund. It has that same pressure going on as the 10-year here in the States. And there's no reason to buy at the moment. I mean, I've had some friends call me and say, "What should I do? I don't want to. They're in their 70s. What should I do?" I'm like, well, buy 3 months, buy 5 months. That type of thing, 6 months. Go out and get the 3 1/4, 3 and 3.5, and you can roll them. Or I said, if you're really hungry, you could go and buy like a 2-year at like 5.8. 4.8. I'm sorry, 3.8, and now it's at almost 4. 4% could be very good, due for people who are retired and have no new income. They only have, old income, and they're trying to just generate more return out of it. Let's see. Do you think it goes lower? I do on the short term here. I think it does. I think that. I've been saying for 5 months, we've got to watch this November election because that is all the media in America talks about all day long, and at the same time, it is literally the focus of the country. The country is focused in on it, and it doesn't seem to be letting go. That's the amazing part. They are not letting it go. And so this is why I say I think there's it's going to be some pressure on it until November. Because it depends on, look, for 90 years and almost 100 years, Democrats have had off and on veto-proof majorities, which makes the president literally irrelevant. So in other words, the Speaker of the House basically controls the country. Okay? The president becomes more of a ceremonial person at that point. And when the election, we know the Republicans are going to win both the Senate and the House. We have a good idea that that's going to happen. Okay? And that's what money is betting on. Oh, what did I do? I punched something in the wrong place. My son's pestering me again. All right, so when you look at the action, when you look at the action of the markets, all they've been doing. Let's go to the market and look at it. We can look at the bonds, but the bonds make sense. I mean, they're barely taking out that June low. Okay, they're doing it just now as we speak in the 10-year. Let's see what they're doing on the 30-year. Excuse me. They do the same thing on the 30-year, okay? Whereas on the stock market, here's the S&P 500, they're not taking out that June low. It's not doing that. Now, money, for when you have 8.5% inflation, of course, bonds should be going down in price. Exactly, up and in rate. But when it comes to the stocks, they're living off of earnings, and they're able to pass along a lot of their expenses. Bonds can't, but stocks can pass along their expenses to customers. Customers need food, clothing, fuel, whatever. The abortion law will make problems. Very little. I mean, it probably is. It's number 6 or 7, number 5 on the polling. The number one thing in polling right now, dramatically, is inflation. Second is the border. I forget what the third is. The economy. Fourth is energies. Fifth is like abortion. They're not that focused in on it, but there's no doubt that there are going to be some places where it is influential. But we'll see. It may not. It's so hard to say. I don't think it's going to be that, but it could be in some areas without a doubt. Especially where there's no new. They did not outlaw abortion in the United States. Well, all they did is gave the power back to the states. That's where it belonged. It didn't belong on a federal level. It doesn't belong on a federal level. That's what the problem is. It doesn't belong there. States have the power to, do many things. The states have gotten lazy, and they basically have done. They've steered clear of taking responsibility on things, and that's not the way the government is set up around here. So in America, the states are supposed to have the most say. That's why every state has 2 senators. In other words, California doesn't have 20 senators and Delaware has 1. Every state has 2 senators. So in other words, every state, a state like Delaware that has 3 million people compared to California that has 41 million, has the same say in the Senate. So, states are supposed to have a lot of power. And then the Congress people, and that's why they're in office for 6 years. Whereas the House of Representatives, they get elected every 2 years, and they're based on population. So, but I don't think the abortion is going to have much of an effect. It'll have some effect, of course, just solely because that's all the Democrats have interest in doing is talking about it. So the S&Ps haven't taken out those lows. And now after tomorrow, we'll see if it breaks down to the 38, and are we going to get down to like the 36? We'll see. I'm sorry, 30. Was it the 36? 37.6. I'm sorry, 36.57. That's it. 36. So we'll see. And again, the markets are on hold because again they're waiting for the election. We don't know if we're going to have a supermajority. As I was starting this off, Democrats have had supermajorities for almost 100 years. They don't know how to not have power. And so when people pretend, or the media pretends, that Democrats have had superpower, they haven't had superpower. They've been nibbling on the edges more than ever before. During the Nixon years, Nixon had 93 Republicans at one point. I've seen where they've had 87 Republicans in the House. That's why those buildings down there are named after speakers of the House, because they were like a president. They had that type of power. So this election coming up, there's a chance we get a supermajority for the first time since 1871. So Republicans could get a supermajority since 1871. That's 155 years. So I think the pendulum is swinging, and I think there's a good chance that that happens. If so, it stops everything. All of a sudden, you're going to see natural gas in Europe drop like a rock in price. Because we can supply natural gas to Europe, Mr. Biden chooses not to. We can supply oil to Europe, Mr. Biden chooses not to. He gives you, I don't know, he's taking oil out of the strategic reserves for the military and putting it into the marketplace, 1 million a day, and he sells 200,000 barrels to Europe or 300,000 barrels to Europe, that type of thing. Gives China 100,000 barrels a day. I don't know. It's crazy. He doesn't make any sense. They don't make any sense anymore. So, my answer to all of your question when it comes to what is in the future is, today is the 20th of September, and the election is November 8th. So we're talking about 6-7 weeks. The answers are going to be much easier to answer, but we always follow our math anyway. Our weekly math and our daily math is so much more sophisticated than the fundamentals. And right now, we've been in a sell now. You can see here on the Dow, the S&P 500, and as much as it went into the buy here and jumped up, it still stayed in a sell and failed to go into a buy there. And here we are, lower. So we follow the math. The math is always the safest, but we know that everybody is staring at the elections. All right, from there, we zip over to, there's the cable. We'll go to the Swiss. I heard they raised rates over in Switzerland, and that surprises me that we're not seeing a drop in the price against the dollar. You can see we've been in a daily buy in Swiss for 5 days here. Statistical Canada revealed that inflation in Canada has decreased more than expected. The news caused a decline of the Canadian dollar that signals that the Bank of Canada is managing in its fight against inflation and could reduce its mandatory tightening plans. Market consensus was that the inflation in Canada had decreased by 1/10. Instead, the data came in consumer prices 3/10. Let's take a look at that. There is CAD right there on J4X on a daily bar. Let's go over and take a look at Chicago Quant right there. Still high. So let's widen this out a little bit. So it hasn't had much of an effect. So in other words, it's still losing against the dollar. You can see we're in that weekly buy. We're in the daily buy. So the pressure is still on that Canadian news. All right, now let's go back to the Swiss. And there's the Swiss, and it's doing the same thing on J4X. Right there. 4 out of the 5 days have been green. And we're seeing that pressure there. Now we drift over to the, let's go over to the dollar Turkish lira right there. Taking out another all-time high. You see the daily is trying to get into the buy. And it's been in a weekly buy since early February, mid-February at this point. So over half the year, so February and March, April and May, June and July, August and September, we're talking 7+ months in a weekly buy when it comes to the dollar Turkish lira. It's gone from the 13.5 to the 18.30 area. And then from there, we like looking at the euro Turkish lira more because it trades more like a currency than an index. And the dollar Turkish lira does the opposite. And you can see it's flirting with a weekly buy, but we are nowhere near. The all-time high is like 20.70. And you can see we're trading at 18.27, which is really odd in my head I'm sure there's some logic to it, but it just seems funny to see the euro Turkish lira trade at parity with the dollar Turkish lira. They're basically trading in the same spot, which is really, strange. You would think that the dollar Turkish lira might be trading at like, I don't know, something like 17, something like that, 16.75. Not both trading at 18.25. That is very unique. And so that's where we are with the Turkish lira. Now from there, we're going to go back. Excuse me. We're going to go back to Canada and take a look at oil. So there's CAD. Let's put oil up on J4X, and then we'll reverse them out and put CAD on J4X and oil on Chicago Quant. So you can see there, oil is up a little bit there. You got the little green going on. It's priced up about 68 cents. You see it's trying to turn here. And then at the same time, as it's rising in value, we've got Canadian still rising in value, which is really odd, because normally it starts to go down. And you can see here, Canadian has moved over the last 6 days from, what is that, like 129.5 up to 133 almost and a half. And at the same time, when we go and look at oil, right there, you see oil has been going down over the last 6 days. From here, on the 13th, in the 80, what's that, the 88, 89 area, down to the 81.9, basically 82. Now we're starting to see some lift go on in here. Yesterday they lifted it. Today they're flirting with the daily buy. But the weekly is still in the sell. So there's kind of some pressure there. It's doing, the Canadian is going up, and this is going down. And let's put the Canadian on here. Right there. And going up. Just the inverse. This is going down. This is going up. That's the way it's supposed to work. Now, from there, we drift over to the South African Rand. And I'll put gold on this, and we'll put the South African Rand on J4X. Right there. And you see this has been moving up, and gold has been moving down. Still in a sell for the last 5 days. And in a weekly sell now for 5 weeks. And then when we do the reverse, we put gold in. You see gold's been going down. And you can see the South African Rand. Right there. Going up. So they have these characteristics. Let's see. We are going in a deeper recession. I think more in Europe than here. I think in the States, there is the Cincinnati Federal Reserve is kind of pointing out a little bit more pressure on the CPI, and at the same time, the Richmond Federal Reserve, or is it the Atlanta? The Atlanta Federal Reserve, I think it is predicting GDP to be almost flat. But right now it's 0.06 plus. We'll see as it gets closer to October if they bring it to minus. I think the best description of it all is the 2-year price of a bond or bill compared to, say, a 5-year or a 10-year. The 10-year is yielding lower. It's yielding like 3.5, and a 2-year is yielding 4%. So it's up, and that is very normal for recession type action. That is normal. You need growth. The United States survives on growth. That's the capitalism. Markets decide values. When politicians, we have a socialist government in right now, and it's really hard for them to do too much, but they're tangling up as much as they can. Let's put it that way. They stop permits, and I think we're at the lowest in oil permits now in like 50 years or 40 years or something like that. And they stop projects, and so they slow down the economy. They find that to be a positive thing, but I don't know why. Since they like to spend money, you got to make money to spend money. Sooner or later, as I guess it was Mrs. Thatcher that used to say, sooner or later, you run out of other people's money. All right. From there, we drift over to the yen. There's the yen. You see it's trying to lift up. We had a volatility signal yesterday, and you can see the pressure on it today. We're flirting with the buy with no problem at the moment, but it's very shallow. We're in that weekly buy for 5 solid weeks right there. And then over on J4X, right there. See, it's perking up again there too. Where's the there it is right there. So you see that long drive down, and it's just been really sideways action. And what we get is we see that the yen is flirting around with that 40s area, plays in the low 40s or mid 40s and back up and down. And I imagine, that's like a 27 or 28 year high. You're talking about like 1994 highs at this point with the yen. And I know the Bank of Japan has been very concerned about it, and they've been talking about ways of resolving it and getting involved. And that's pretty much the name of the game. So, from there we drift over to the south of the border. There's the Mexican peso. You see it's in a sell for the last couple of days, but not really going anywhere. And you can see now they're flirting with the weekly again. Does that mean they're going to probably go after the... Let's see if we can tighten this up a little bit so you can see the bottom of the range. There's the bottom end of the range. So I thought they would try to get up into this area here with the weekly. But this is really, again, trapped. Now that's our southern neighbor. So we do a lot of trade with Mexico. So it makes sense for it to be, aligned very well with the dollar. Just like Canadian, we do a lot of business up there, but Mr. Trudeau has been trying to slow down the business. He's still very aggressive with the COVID thing, whereas Mr. Biden keeps on telling us it's over with, and then his administration keep on telling us that it isn't. It's a very strange administration. In any other presidency, we would see people fired constantly. And no one has ever been fired from the Biden administration at this point. One or two have left, but they weren't fired. But that's the strangest thing is they keep on, like he was on a major TV show on Sunday night, said all these kinds of things, and then came back. The White House came back with a message that walked back like 2/3 of what he said. It's a very strange thing to watch. All right, from there we're done the currencies unless someone wants to see something. So what we'll do is we'll take a quick look through the metals complex now. And there is gold. You see gold feeling a little pressure there this morning. And the weekly there. And let's put silver up on J4X. Right there. And you can see it's kind of flattish, playing in the 19s and 20 area. Let's take a look at it here. So yeah, 1928 went into a sell yesterday. It's kind of sloppy but down. There's pressure, and at the same time you can see the weekly buy is flirting with trying to get into the weekly buy. We keep on thinking, and this does look like a reverse head and shoulders when we tighten that up a little bit more right there. That does look like a reverse head and shoulders where it's going to try to go up. We keep on thinking that interest rates will come down over the next like 3 to 6 months. And we figure that will give some energy for buying in the metals complex. We've been talking about that for 5 months now, that we expect to see some type of bottom put in silver and gold in the late September, October region, because I think the markets will anticipate the the Republican victory, and I think that's what we're seeing here now. From there, we go over to copper. Copper is kind of bouncing around now. It's hanging out in the buy, but it's just on the edge of the weekly sell. And that is what we're seeing here now, as we see this copper just going sideways. I guess China, which is having so much financial problems and no growth, or low growth, or whatever growth, has put a lot of pressure on them. So we don't see copper. Copper was trading in the $4.50, $5 area for a couple of years when China was roaring along. But when China, I heard that Evergreen, we've talked about this here. Evergreen, the largest housing market owners or something like that. I don't understand the exact system, but in the end result is Evergreen. They're largest in that sector of housing. Is in receivership outside China. Only inside China is it still functioning. And somebody came into Hong Kong. They had this massive skyscraper, and that was taken in receivership about a week ago. So that's probably why we're seeing copper weak, is China is weak. Morgan Stanley came out, one of the brokerage houses here, came out and said, they love China, but they don't think China can get us out of this weak economy. Funny people. From there we go to, let's take a look at platinum. I don't think we looked at platinum yesterday. There is the October platinum contract. Oh, look at that. It's playing with the weekly. We really believe this is going to be the answer. That's a lot of strength I see there. Green line busting through. The blue dashed line off the super busting through. I think you can feel comfortable. Let's see. Is silver in a buy? If silver's in a buy, if this thing goes into a buy, I think you want to be long. You definitely want to be long. Especially with it over the weekly buy number there. We get into a daily buy, and that weekly buy, it could be a good 24 to 48 hour long trade. Definitely. Just because of platinum ripping on the upside there. Like that. All right, now from there, we go over to the energy sector. You can see here we're playing with the daily buy, with the spot. We're seeing the same thing on the out month of Jan. We're looking at the January contract now. Where is that at? It is right there. See the same action going on. Matter of fact, yesterday it looks like it was in the buy. Went into the buy. There we go. Let's do this. There we are. And we're just on the edge of getting back into the weekly buy, which is kind of nice. Let's see what Spot is doing. Spot has been in a weekly sell for about 2 weeks. A little better than 2 weeks. So, we're thinking that this is going to get going. We think the oil market is going to find, we're going on to the colder weather. I'd be very surprised. Mr. Biden would have to start pushing out like 2 million barrels a day out of the military reserves. That's what he's doing now. He's taken our military reserves down from 300 million down to 160 million. He's just pushing it out everywhere across the planet, from Europe to China, and a little in the U.S. The whole bit. It's fungible. So in other words, if you bring down prices in Europe and China, then it also brings down prices in the States. So that's where we come down to with the energy sector there on the oils. Now let's take a look at Brent on J4X right there. You see Brent is trying to pick up. We've seen it as down as like 91 and so forth, 90. And now we're seeing, I don't think it got to 88, but it got pretty low. Yeah, it did. It got down towards the 80s, 89 and change. And you can see here we're trying to turn up. So Brent is starting to show some life in it also at the same time. Nat gas. Let's take a look at natural gas. There it is there on the Chicago Quant. It has been pushed down for the last 5 days. We're still in that weekly buy until we see that thing go into a weekly sell. We just figured that the daily might be the only real good indicator in this thing when it comes to its direction. Gets into a buy, it'll lift up, and when it gets into a sell, it's probably going to drift on the downside. And you can see it here on J4X right there, natural gas. That pressure on it. And then what we do is we look at that Spanish company that trades natural gas. We've seen it as high as 30. Right now it's been fooling around in the 25 to 26 area. And it's just hanging right on the top of 26. We've seen it down on 25, like 25.70. That's always something positive in the sense of seeing a company go down in value that deals with gas, meaning that the price of gas obviously is coming down. Let's see what that was. I bet when we go to a weekly or a monthly, let's go to a weekly, make it the whole page. That product was trading at 14 in 2019. In 2021 it was trading at 20. And then that's 2021 still. That's March of 22. You see it popped back up from the invasion into Ukraine, and it's trying to work its way back down. And I imagine if it could go after this area here, that would just represent more lower prices of natural gas in Europe. Alright, that's done with the energies. Now what we do is we drift over to the stock indices. Remember, traders, if you want to see something, just shout it out on the chat line. We'll go after it. Now, here is... There it is right there. You can see the NASDAQ or the Tech 100 trading at 89.50. We see the S&P 500 down 28 points, whereas the Tech 100 down 90. And the Dow Jones Industrial Average down 213. And Bitcoin down 455, which tells us more than anything else there's pressure on the equity markets. Bitcoin seems to be the real directional, So in other words, when we go and look at Bitcoin, let's put Bitcoin up there. Right there. There's a September contract. And we take a look at the way it's acted over the last, since August, coming down from 24, almost 25,000 right there in the middle of August. And then we go and look at, say, the S&P 500. Well, we can do that. Put it up on J4. Oh, you can't see that. Let's do this. And then you didn't see the stock indices either. Okay. Let's straighten that out. And then let's put the S&P 500 on J4X. Right there. You can see that is that peak right there. The 15th. Right there, there's the 15th. You see the equity market has come down just the same way as the Bitcoin. They seem, at this point in time, cryptos seem to be, as we've been talking about, they are a new asset class. And so they are following the equity markets in trend. And they have become, I guess, what you would call, and I call, fair value. So in other words, they needed to get into the 20s and the 30s and the 50s and 60s, I guess, $1,000. Now they've backed down into what is considered fair value in a bear market. Now, obviously, when we see the stock market go back up to all-time highs, more than likely we will see Bitcoin try to do something close to that at the same time, or at least play in the 45,000, 50,000 area, something like that. And that would not surprise me at all. But it's a new asset class. What it is it's a currency type equity that doesn't need to be in dollars. It's a value of its own. And so in your country, when you go to try to buy it with whatever currency you have, it has the characteristics of gold, it has the characteristics of stock equities, it has the characteristics of a new clearing delivery execution system like a bank or a brokerage house. It's a very interesting asset. I've always liked it right from the beginning. I saw all those attributes. When people said that they were going to go to $1 million, I was a little surprised that they would think it would go that, enormously up from a penny. But, it is now seems to be, dug into being that interesting asset that matches equities. So it's going to be weak right now with the rest of the equities being weak. And when it's strong, it's going to be strong. So in other words, we see where it was up in no more than May, it was up in the $40,000 area, right? And then in May, is that May? That's March, okay. And so, that's, I guess this is April. So let's see if we can get back there, right there. So that's March. And you can see it was trading in the 40s. And you can see on this, there is April, there's March right there. The S&Ps were up at 4,600. And so that's January. That's February. That's March right there. And they were trading in the 4,600 area. So you can see how they march together in their own characteristically way. Let's crunch it up there like that. There you go, and you can see that. Same action there with the went into a weekly sell. I guess there's a spot. This is a spot. So this chart, I guess at one point, was in a weekly sell at that point, in the probably the April contract. And so this is September now. And so when you get too far back, it gets kind of weird like that. But that is what cryptos are. They are now an alternative asset class. And that's what we've been saying from day one here at Dukascopy. That it is an alternative asset class. It's something to be respected. I've been saying that to Dukascopy. All right. From there, we drift over to the stock indices themselves. There's the S&P. And it's in a weekly sell for a fourth week. But it has climbed into a daily buy yesterday, and it's really pressuring itself, trying to get some action in there. But you can see the weakness we're seeing today. We'll see. Markets are going to be open in about 11 and a half minutes. Again, there's going to be cute little rumors, so forth and so on, because the Federal Reserve is having its meetings, and someone's going to say something, and knock a market up or knock it down for an hour or a half hour or that type of thing. Can anybody say insider trading? I can. More than likely, that's what it'll be. But the Securities Exchange Commission could care less. So from there, you take a look at the NASDAQ 100 or the Tech 100. And it's in a daily buy for a second day. And you can see the same thing. 4 weeks in a weekly sell, and that pressure is on. Right there. Same situation. Been moving down, making new lows, from from the beginning of the month. And we'll see how much they start to lift them back up, and they start to fight to climb. But 0.75 percentage point increase tomorrow. They will have a press conference. I'm thinking what they're going to say at the press conference.
Market data connection lost.
They may say something about taking a pause to look at November's numbers, since inflation has been sideways for the last couple months. They're probably going to do something like that, which should put a real charge into the marketplace. It should make them kind of excited, and just go all kinds of, oh my goodness, we may be coming to the end, and the stocks could get happy, and it's that type of thing. It's always that type of thing, and that is the answer to all that. Now, from there, we'll take a look at the Dow Jones Industrial Average. Right there. You see it's 3 days in a buy since Friday. It's trying to lift. And we are in that weekly sell for 4 weeks. And we'll see what they do here. Let's see if this thing starts to turn back up again. Did we look at that Russell yesterday? I forget if we did. But let's take a look. I don't think we were just talking about its weakness yesterday. That's not it. Where's it at? Russell. Right there. There we are. This is the weakest of the U.S. indices. We were comparing how it's the same way. It has not challenged the lows here. But it is in a weekly sell on a second week now. Whereas it went into the buy here and caught that whole ride, went into a sell there, and then pretty much went into a buy. Nice little pump. Very sensitive to our math. It's very good. It follows our math very well. And see, matter of fact, that's a buy right there, and it went into the sell right there, and then it went into the buy on the close of that sell-off. We should put that in there. Okay, there we are. So there's your buy right there 3 days ago. But we're in a weekly sell now, so it makes it tough. But it's definitely bounced up. Now this is the weakest of all the stock indices in the U.S. And what I mean by that is it's the lowest caliber of stock. They barely have any earnings. I don't think any of them have over 300 billion in assets. 3 billion in assets, not 300. 3 billion in assets or 2.5 billion in assets. Some of them only have $500 million of assets. There's 2,000 companies in this index, and it's kind of taken the old position of the Nasdaq 100 or the Tech 100, whereas they used to be very weak companies, and now they are the best of the best. You have Amazon and Google and Facebook and Tesla and Cisco Systems and Microsoft and Intel and just dozens of tech companies that got crushed in 2000 that are 20 years later are the mainstream of the financial universe when it comes to companies and earnings and so forth. They're cash intense. They get more pressure because of more higher interest rates, but these are the weakest companies of them all. One of these, out of those 2,000, or two of them, could be an Intel or an Apple computer. That's what's hiding in there. You just have to guess which one out of the 2,000. All right. From there, we go over and take a look at the markets. We'll take a look at them on an intraday basis. Let's see where it is. Let's close that, unless you have something you want to see. So let's close that. And there it is right there. Let's take a look at the S&P 500 and its actions. Now down 32 points. When we looked at it, when we started looking at the equities, it was down at 28 points. So it's dropped a little bit more. You see we've been in a daily sell, or not daily, I'm sorry, intraday sell since here. And it stayed in the sell, even with this bump and the volatility signal. It stayed in the sell, and it's just starting to flirt to try to get into a buy right here. But at the same time, in 4.5 minutes, the markets are going to open. So you have a lot of different people coming in now trying to race ahead of the market. Then from there, we take a look at the Tech 100 right there. You can see that has jumped back into the buy, and that was down about 100 when we first looked at it, and it's down about 100 now. So it hasn't really budged compared to the S&P 500. You see it went into the daily sell right here, stayed in the daily sell all the way down to right there. Right there? Right there, this one. And it's barely climbed. Went into a sell here, went back into a buy right there. And went, it didn't go into a sell there, and it's still in that buy from here. From there. So it's not really going anywhere, and like I said, in 3.5 minutes the markets are going to get rolling along. And then the Dow Jones Industrial Average right there. It's been in the sell since almost about 25 minutes after the webinar started. For the last half hour it's been in the sell, and it's just flirting. Let's widen that out a little bit for you. And it's just flirting with trying to get into a daily buy, but nothing so far. With about a minute, about 2 minutes to go before the markets open up. Then from there we take a look at the crypto side of it. You can see here, this is let's see where are we at here. This is where the webinar started. Where is it at? Webinar started right here. We went into a daily sell right on that intraday sell there. It slid down just like the stock indices, and stayed in the daily intraday sell down all the way to here. So from here all the way down to there, which is about $200, and started playing with the buy, and we've been lifting a little bit, and then it goes into the sell right there. And again, with the US market getting ready to open in about a minute and a half, then you can see a little pressure starting to build on it there. All right, so that's that. Now, traders, we'll be seeing how it all plays out with the Federal Reserve over the next 24 hours. So, actually, it's like 24 and 6. Let's see, at 9:30. So 10:30, 11:30, 12:30, 1:30. So 4. So 27 and a half hours from now, they will be playing with the rates, and we'll see it happen. And that's pretty much the name of the game. You can see they're putting more pressure on the Tech 100 down 104 there. And you can see the S&Ps are stuck at 32. And they're starting to pressure them there. All right. So this is Doc from North America. Catch you tomorrow, same time, same channel, on Happy to Hump Day. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders. Be safe, be smart.